the mints have opened up that marginalized capabilities at best, or capacity at best, and so there's been a little bit of a resumption of I guess you could call it semi-normal activity. But look, Chris, it to me this is all really moot in the respect that the supply chain is as fragile as I've ever seen it.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it is time for this week's physical gold and silver market update. Or no, I think we called it the physical silver and gold market update to feed my silver fetish a little further. But fortunately, rather than just my banter today, we have Andy Schectman joining me on the line from Minnesota. Andy, it's great to see you today. And how are you, sir?
Good, Chris. Good to see you too, buddy. Glad it's Friday.
Yeah, well, I'm imagining, got a couple news stories I'd like to dig into today because a big headline yesterday, CME Group secures $7 billion credit facility to protect against a clearing member default. In my inbox, I see a headline of, I guess maybe that's been the case for years, so who knows how unusual that actually is, but a lot of stuff happening fast. Iran and Venezuela doing gold deals. So curious as always what you saw this week, what customers were buying and selling, any changes in premium, and I'll let you take it from there.
I mean, it's there are the supply chain is loosening up a little bit. It seems that though maybe there's a little bit of a calm before the storm, the market has rallied a bit. It's come back maybe 50% of what it fell. The mints have opened up that marginalized capabilities at best, or capacity at best, and so there's been a little bit of a resumption of I guess you could call it semi-normal activity. But look, Chris, it to me this is all really moot in the respect that we're very the supply chain is as fragile as I've ever seen it. The uncertainty about what is coming next is to me I'm concerned about what happens next. Supply chain can very quickly break down. We're still not seeing much coming out of the U.S. Mint in terms of silver eagles. We're seeing hardly anything come out of the Royal Canadian Mint in terms of silver maple leafs. And no one sells in a gold bull market. In this environment, the higher the price goes, only reinforces people's fear. And so all the business that this market is experiencing or has over the past 8 weeks has been void of the public selling anything. And so really that kind of is what characterizes a precious metals bull market over others, is that the public isn't selling. And so when the centers of supply run out or run into fragility in their delivery, if the supply chain fractures, that's it. And so right now I would say, yeah, maybe you could argue it's the last train out. There's still some decent supply, especially in gold and even in silver, but getting it in your possession before it becomes obvious you need it, I think is really important right now.
Yeah, and Andy, it's interesting what you mentioned there. As I've been thinking about, let's say, I'm hearing dates of stores opening back up here in Denver next Friday, even, I believe. So if we head towards something where life kind of starts to approach normal again, I'm wondering what you think might happen to the order flow. Let's focus on silver for the moment, where, gold, the price is higher, but silver, we're actually at the same price where we were for the last couple of years when no one was buying. So we've seen this wave of buying. I have no doubt that a lot of it was tied to Corona, but it's funny the way investors react to something. And it's like, let's say Corona ends and silver is still $15. Mm-hmm. I wonder if people are going to go back to doing what they did, or again, it's something that you and I talked about. This was about a month ago before we did that first interview. And it just stood out to me when I asked you what you said. People are buying a lot. And I said on those days in March where we had the spikes down on a couple of those Fridays, they still buy there. And if I may quote you, you said yes, because they know it's BS. And I'm wondering, what do you think happens like in the scenario where stores start opening up and maybe the supply chain comes back online? Do you think people still keep buying at this rate? It slows down, or has the environment shifted even without Corona affecting it?
I don't know. I guess I'd answer it a couple of ways. I expect this to happen. I mean, I expect the sentiment and the enthusiasm for a resumption of even a semblance of a normal economy to make that happen. You'll see. I think maybe the stock market continue to get a bump a little bit, anyways, and a little bit of uh, you know optimism. And with that, I think people who maybe aren't thinking a couple moves ahead, they're just thinking things are going to go back to normal. We're going to see a V-shaped recovery. And I think that's the fatal flaw. I think this is, as I said, last train out, in the respect that, yes, that'll happen. And I think you will see a period of time where maybe you see a slowdown in purchasing, and maybe the mints can catch up with supply. But I don't think we see a V-shaped recovery. And if this thing comes back, uh, cold and flu season with the second wave, I think at that point, the economy will completely shut down and we'll go right into a depression. And at that point, look, what's different this time, Chris, is that a lot of the big money that has been made in the stock market over the last several years, courtesy of the Federal Reserve's easy money and low interest rates, has created massive asset price inflation. And that money was really, I think, terrified last month when 40% of their wealth evaporated in a period of a few weeks. And those people never gave a thought to buying precious metals. That now they are. And I think when the baby boomers look at the potential of the unknown or instability moving forward, maybe this time it's different. Maybe this time, as the market strengthens, those who are still not convinced and nervous come out. And you see, previously that would have found its way into the bond market, as typically stocks were risk on and bonds were risk off. They had a natural inverse relationship. They're positively correlated right now to this interest rate environment. And so, I think that if you see a stock market that turns over, you may see a brief rush to safety of the bond market that will potentially move up. But with what the Fed and the Treasury are doing with printing money, I think you could see the bond market turn over too. And then there's nowhere on the planet safe to put your money, with the exception of the inversely correlated precious metals market. And, if that is a resumption of lockdown and continued fracturing of the supply chain in that environment, you missed out, and the price will go up, but there'll be no product to get. I mean, that's the potential pitfall as I see it, in all honesty.
Yeah, and a couple great points you mentioned in there. I don't know if you noticed why I was giggling. It's like a natural reflex action anytime I hear someone call the U.S. bond market the safe haven. And the idea, and I say this, Moody's was my first job out of college, that they still have a AAA rating on U.S. government bonds, essentially saying, according to their metrics, that there's no way, it's just not possible to start a business that's in better, more sound financial condition than the U.S. government. Yeah, it'll be interesting to see when that pops. But one other comment, you mentioned the V-shaped recovery, and I'd even be willing to bet an ounce of silver right now that not only won't that happen, but that I will guarantee it's impossible for that to happen, because I'll say that and preface it with, we could well have the stock market at all new time highs by the election, but what gets missed in the mainstream there, and perhaps is the answer to my own question, because as you were answering whether when Corona's over, do things go back to normal? I don't think so in the metals, because the one thing that gets glossed over amazingly is that in between that time, the Fed, I mean, if you called it easy money, what they were doing last decade, I mean, we might need to call it effortless money or free money. Because that's the thing that got missed, is the Fed has been given the blank check. I think it's still sinking into people, maybe even the financial community, because they're, have Corona going on, they're worrying about food and a whole bunch of different stuff. Yet, you have the Fed printing unlimited and silver is still at $15. And I think that's what people are noticing. Some people, because you talked about the mainstream a little bit before, and I'm curious, I would imagine my feeling has been that even with the massive increase in bullion sales that we've seen, which, and you can put a number, I don't feel it's been like 30 or 40%, but for most of the dealers, like a 5X or a 10X. But I don't think that's with really anybody in the mainstream buying. I mean, the tech funds, that only buy on momentum, they're not buying. I mean, so I wonder if you would agree that the majority of this demand has come from the gold and silver bugs. And even in 2011, I still don't think most of us in our lifetime have seen mainstream investment demand into gold and silver, which with what the Fed is doing, you would think is least possible that could be in place.
I'm glad you asked that question, because for the first time in my career, I'm beginning to see much more mainstream participation. And typically the call or the conversation, which I've never had in 30 years, centers around someone who, a friend, it'll go like this. Andy, I've been playing golf with John Smith forever, and he's been telling me to do this, to buy gold. I should have listened. I don't know why I didn't. I just cashed out of the stock market. I have $700,000. What do I do? It's that environment that's creating price inflation in this industry, because the money that, normally we would only sell to the choir, like you're talking about. We're several rows deep into the audience, Chris, and I've never seen that before. And typically, people would give us 5% of their assets. Now they're giving us money that they would normally give to their securities portfolio, and they're putting much larger percentages of it. And it's people whom have never bought gold and silver before and have been thinking about it, never have. That's an environment we've never seen. Now, I don't know to what degree that represents. Before all this started, the numbers were 0.5% allocation to the U.S. Financial portfolio was in precious metals. In 1980, it was 8% when the Dow and gold were last crossing at 800. If we see a revision to the mean of that 40-year period to 2.5%, that's a 5-fold increase in demand in a very, very fractured supply chain. It will break down in a matter of minutes and or days at the worst. So, supply should be really the biggest concern for anyone in this industry. And it's funny, as you mentioned, I don't even remember saying this in the quote in your book, but I do know that most of my speeches at the Sprott Show over the years have centered around my belief back then, because I kept seeing the mints shut down in normal times, that this market would be identified in two ways. By the public, it'll be identified by they missed out, the price is too high. By people who understand this, it'll be identified by the inability to source good product. And so I think it's a very, very high likelihood that, what is a normal ability to get product is no longer the case, and may never be, at least for a long time. And if it is, it can change like that in terms of lots of product to no product overnight. It's a very thinly traded market right now.
Which leads quite perfectly, thank you, into my last question for you today. It was funny because there was an article on Zero Hedge this week that mentioned the Perth Mint. I guess they were backed up a month out on deliveries, but they also mentioned that they were sending a lot of their metal to the COMEX to meet delivery. As I'm sitting there reading that, I'm like, gee, didn't Andy say last week in the beginning of the video, and sure enough you did, that the majority of the product you're able to source now is coming from the Perth Mint. So at least, now I'm not saying this is right, but just as I'm walking these steps through my head where, all right, a lot of the other mints are shut down. We're seeing a big surge in retail demand, and now that's being sourced by the same place that is going to have to fill COMEX demand. It seems like a lot of pressure where you have the major exchange in the world. Why does the COMEX have to go to Australia for their metal? I mean, it seems bizarre. I know they don't even claim to have a one-to-one storing the metals there, but it just, when you say it out loud, it sounds bizarre and like, all right, now everyone's counting here. So you have retail pressuring that supply a bit. I have not heard anything of any industrial manufacturers starting to front run metal, but gee, you'd have to think if someone's sitting there watching this and we're watching Arcadia Economics, we're breaking this down, supply going down, mines getting shut down, demand surging. Is that a vulnerable Achilles heel that everybody's counting on the Perth Mint right now? Or maybe you can put into perspective how big it is, how much they can really do, or it just seemed delicate to me.
Of course, and we're very early in the ball game. You could say it's the second inning, at least in terms of realization by the public, as you mentioned, the mainstream. If it's this hard to come by, if it's this frail, well, what happens if it gets worse? And the Perth Mint has really been a godsend for us in terms of product through this entire ordeal, especially in terms of silver. One thing that I've talked about for a long time, and Chris, you talk to people, I don't understand why I seem to be the only one who keeps harping on it. I really don't. I haven't heard it anywhere else. Yet since July, I talked about it in every interview. The reclassification of gold as a tier 1 asset should be the only thing people need to understand. And that, I think, is responsible for so many of the dislocations in price. Central banks are buying gold massively. They're holding down the paper price as long as they can, buying the physical. And I think that's one of the big reasons you see the anomaly that is gold and silver ratio. And I think it's one of the reasons why you're seeing such difficulty in getting gold. But you mentioned also a 1-to-1. You said it's not even a 1-to-1. The term rehypothecation comes into mind when you think of the COMEX. It's many hundred times. So if everyone tried to turn in their contract for a bar of gold, several hundred people would be cash settled. One would get their metal. The whole system is built inverted on a house of cards. And when you see these types of things that are happening, dislocation in the price between COMEX and the London Metals Exchange, the Perth Mint having to fill the gap at the U.S. Mint, all of these things are precursors to what cometh next. And I think it reinforces why you want to take a position right now, and whatever the premium is does not matter. Whatever the cost is does not matter, because pretty soon, if you can't get it, what is it worth? And I think we're closer to that than being able to have a free-flowing market, and that I do believe.
Yeah, it's an interesting point you mentioned, because I know a lot of people have commented that, it's like, no, I don't want to buy when the premiums are this high, which I can understand. A lot of people think the dealers are gouging, which I would say if it was just a bid, still paying the regular bid under spot for metal, and then, you're $10 or $15 over. But I mean, you guys are paying over spot. So, it's a very interesting dynamic. And the way I've found it easier to think about is that, and I think we talked about this last week a little. All right, so the COMEX is here, but this is the price where you can buy or sell metal. It is about on silver, $5 to $10 higher. So unless the COMEX really does have some delivery mechanism, I mean, there's an ARB on the board. So, I would I find a different way to think about it, rather than, well, the premiums are jacked. I'd just say, like, well, no, silver is like $21, $22 now. The COMEX, is like the Mickey Mouse price. If you can't get metal there, I think Jim Willie, when I brought him on yesterday, was mentioning it, or someone was saying how it's like, well, we have this great sale on these TVs, and you go in the store, well, yeah, it's a half price, but we don't have any. So, and again, in wrapping up, I mean, for all the people who are frustrated with the governments and the banks, I guess I'm looking for a positive way. The way I see it is like, buying gold or silver is a de facto form of shorting government. So if you're watching this stuff happen and Pelosi does this, Trump does that, $6 trillion stimulus package, and you're like, this is insane, let alone some of these unfortunate things that continue to emerge about the pedophilia activity that a lot of these names were involved in, where, and that actually I started learning about that right when I started writing for you a couple of years ago. And I remember sitting there thinking, I'm like, wow, if even a fraction of what is being reported on these Clinton servers and Anthony Weiner's laptop and WikiLeaks, I mean, we're not talking about someone front running a visa bill so they can make $1 million. I mean, stuff that I think is unraveling what we're seeing now. And so I don't know, that's just how I think of it. You know, you can't maybe sell government, or can you? I wish there was a way, but I mean, to me, the metals, and that's why I do what I do. So maybe we'll get t-shirts made up for that. If you don't like government, buy silver. We do have the Got Silver with a question mark t-shirts made up. And actually, folks, you can see in the description below, it's like Got Milk, but Got Silver. Andy will get you one of those t-shirts. I know we didn't match today. I was kind of prepared for semi-Hawaiian Friday, but I didn't tell you. But a lot of fun things going on. And just in wrapping up, you can let folks know if they want a price quote, they have questions, how can they contact you and also feel comfortable they're not going to be pressure sold or anything like that. If you could let them know that.
Yeah, just send us an email to Arcadia at Miles Franklin, and we'll give you a non-obligatory price quote or answer your questions best we can. You know, it has been very, very busy lately. We try to get back as promptly as possible. You know, we're a little bit different, Chris. We do things the old-fashioned way by phone call primarily. We're not an online store, but we are licensed. We're bonded. Minnesota being the only state in America where you have to be licensed and bonded in a federally non-regulated industry. We're very proud of the fact that we've never had a customer complaint ever in 30 years of business, but state of Minnesota, you know, makes doing business with us or any company in Minnesota the safest possible in the industry. And give us a call or send us an email, and we're happy to answer questions and give a price quote and try to make sense of all this craziness in a world that for in many respects lacks a lot of sense. But keep it simple: buy gold, buy silver, have a little bit of have some choices when other people who are stuck in dollars or traditional financial assets have none. While gold and silver, there are no guarantees. I guess you could say, look, they've been around for 6,000 years and been through every single crisis, every single up and down. And whether it's inflation, as most people think of gold for, or deflation, you could argue gold actually performs best in deflation because it's the only asset that is not simultaneously someone else's liability. So, you know what? Mitigate your exposure to the dollar and get out of the way of what's coming. And I think in doing that, that's the best you can do right now. And we'd love to be able to help your listeners achieve that and answer their questions along the way.
Well, I appreciate this partnership we've set up and that you're getting people good prices. I know on some of the inquiries I've received, you mentioned the online prices and you're able to beat those. So again, and I think, you know, if you're buying a, you know, couple $1,000s or $100,000 worth of metal, I mean, probably do want to talk to someone. So
absolutely,
folks, if you do, Arcadia at milesfranklin.com. We'll get you in touch with Andy. Andy, thank you as always for joining me, sir. Who knows what will happen next week? I got a whole bunch of headlines I'm excited to dig into here and cover on the show, keep people updated. So thank you for checking in. And folks, if you are wondering why all these things are happening, well, fortunately, Mr. Jim Willie was on the show this week and explains it, which you can find just by clicking on this box now.